Hello. Yes.
Yes. Yes.
Perfect. How's everyone doing today?
Slow day for
Good.
me. Like I just got like a new eyewear prescription. I'm still like getting used to it.
Oh, well, that's good.
Yeah, it's just like the new glasses like making me feeling like a bit dizzy. Prescription went higher, so it just taken a little while to like get used to it. So
Yeah, that was it's always tricky. I think one of my buddies, he recently had his prescription changed too, and it took him like a couple of months before he fully got used to it.
Ethan, could you turn yourself up a little bit, please?
let me eat this goddamn mic. Okay. All right, is it better?
Yeah, that's better. Thanks.
Cool. So let's go ahead and get started for today. Just so you guys know, this is going to be recorded, and then I'm just going to upload it afterwards, after the call, just to make it a little easier. So I guess let's just go round robin. Obviously, a couple of big events happened over the weekend. Just not a ton of data came out today. Do you think want to go ahead and get us caught up to speed on what's been happening in the macro space?
Okay. I mean, obviously the big news over the weekend is the like the French election. So like after like multiple like uh I don't know like just like among like a lot of like withdrawals, like strategic planning and voting. So like the Union of the Left has won the most seats in the second round. So right now like so today there's like also like a couple of like new developments in the French elections. So obviously right now before the Olympics, I don't think Macron like wants too many like uncertainties within like the selection of his prime minister. So like he asked the current prime minister Gabriel Attal to stay in his position, and I think to nominate a new government. I think Macron has to like finish that by July 18th. But if like the his demand towards like Attal like to stay in his position is actually the decision, then I mean that's probably like what is like going to be like the makeshift prime minister for now. Obviously, initially like the euro FX responded like in a mildly positive way. But I think the euro kind of like retracted like a very like minute rally. Like by the end of the day, I think it's close to like unchanged now. Also like the French equities also kind of like fell a little bit. Uh, I think this is like in expectation of a left governed like France to like because like the left they don't have like their policy platform is very costly, so that kind of like caused some like exert some pressure on the deficit side of things. And also I think on June 19th the European Commission has launched the excessive deficit procedure on France, and today they expedited the decision and finally kind of like it's like officially announced like the France to have being like categorized as the excessive deficit, and they need to like comply with measures to reduce their deficit from today. So yeah, with like the government still kind of like undecided, not sure like uh, if the left is gonna like take power or yeah, it's like a lot of uncertainties around like the budget. So I think that's kind of like why the and like the French faculties kind of like retract their like a knee-jerk rally like right after the decision. Yeah, so like the situation is like still pretty fluid. Of course, like the far right and far left, like in total, they still don't have like the majority seat. So that means there won't be like a lot of like votes of no confidence. So like laws can still be passed through. But it's just like how like determined or like how adamant the left is gonna stick to their policy platform because according to the L'Institut Montaigne, the budgets or like the spending each year from the left policies is going to be like 170 billion euros per year, and that's kind of like a at least like 5 to 6% of the France GDP. So I mean that's obviously violating the like the criterion like the European Commission is setting up. That's like 3% of GDP. So I mean they have like still a long way to go. So yeah, I mean. Uh, although like the election has like concluded, but I think there will be like more uncertainties ahead, especially like I think it will be like a Q4 story where like the 2025 budget like voting. I mean that issue becomes like the focus point, and then I mean yeah, I mean there will be like more volatility probably like in Q4, but like for now, I mean it's just like the election uncertainty has like faded. I think also like the initial reaction has already is gone, and yeah, I mean it'll be like a grind, and it's gonna be like more about like the it's either from like the U.S. Macro or it's more about like the economic data in France. But right now, I think just regarding like the election wall, and also like the budget wall, I mean things are gonna be like on the calmer side until Q4. Yes.
Yeah, that makes sense. I think that, one of the things that I've noticed kind of going through this cycle, and this is exactly what happened. This is typically what happens, by the way, when it comes to election uncertainty is, you can't really, you can't really set your expectation necessarily like the policy proposals of government, yeah, or of, like the parties. You have to think about what can they actually accomplish. And then the other thing too is, when it comes to France, really good illustration of this is the fact that if you exclude LFI or France Unbowed, which is Mélenchon's kind of group, you can form a centrist government that has a majority.
Yeah.
And I don't see a reason why that couldn't happen. In fact, I think one of the leaders of the Social Democrat Party in France that won a significant share of the votes, she was put up as a potential PM under Macron about 2 years ago. So I think that there's probably a lot more wiggle room, and we're gonna have to wait to see, what this actually means for France. But I do think that post digestion, we get that election risk premium kind of fades. Part of it will stay structurally because, to your point, majority will be thin, and so how long will any government last is really anyone's guess right now. But
Yeah.
definitely, fading consensus has been a pretty good move, through the period. So
Yeah, I
makes
think,
sense.
yeah, like I think one crucial, I mean, it's just like weird, like the decision of like finally like officially announcing like France is like in a excessive like deficit state. Like that announcement comes out today, right after the election concluded. So I think that kind of like shows like the EU is kind of like worried about the prospect of like France's like deficit problem like going like much wilder than this. So yeah, I mean June 16th, June like 19th, that's kind of like a proposal, but like today is kind of like official. So I mean, yeah, and like as for like the U.S. macro side, like tomorrow we have Powell testifying in front of the Congress. I think that will be like the major event. And then like on Thursday we have like CPI, and on Friday we have PPI. So like we'll have like some more information regarding inflation this week. So yeah.
Right, some good stuff. On the inflation front, currently, WERP for December is about 2, like just about. So I think that hard to see a path of data that doesn't continue to show more softness in the near term. And
Right.
so wouldn't be surprised. I mean, I think that we're kind of in a regime where we can lift from 2 cuts, to 3 cuts. And so there's probably another 50 basis points of moves there, from a cut standpoint, that we can see get priced in, I think, through the first half of the month. But I am getting a little cautious on US equities into the second half of July. We get into a pretty bad, like the first 2 weeks of July are pretty strong seasonal period. And then after that, there starts to be some headwinds. I think one of the things is like estimate revisions is starting to flip the other way. And as we move into earnings, my expectation is that earnings is going to be going to come in a little soft. It's going to come in softer than Q1. And so I think that given where equities are right now, there is that risk for I don't want to say a correction, but a little bit of disappointment, I think, on an earnings front. So, for like the way that I'm setting the portfolio, it's pretty much in a more defensive posture with a low net. And just trying to juggle and reduce that equity exposure. So that's just something that I would say to kind of keep in mind, and maybe we can try to figure out some trade ideas off of that. I think, for me, when I look at it, I'm looking at like the VIX curve, and to me, the VIX curve looks, it's sold off pretty heavily today. And so that's something that I think could be attractive, because I think that the labor market unwind is already, like, that process has already begun. And so, even if the Fed were to do a cut in July, which I think is kind of, there seems to be this a tale of on the buy side that thinks that if we do get a cut in July, I don't think that's going to dampen vol. I think that the Fed has been trying to dampen vol, and then as the data continues to soften, that's gonna allow vol to kind of spring out. And so that's just something that I'm going to want to develop, and we'll probably run it by Serge and Rally and kind of get their take, because I'm not the most expert on vol.
I mean, like perhaps it's like the put is like so cheap. Yeah, it's probably like there will be like some like good purchase on the put side, I guess. But yeah, I mean, it's like there will be like some interesting ways to kind of like long walls. So we'll see.
Yeah, should be fun. Okay, let's go ahead and kind of rotate over and take a look at equities. Andy, you want to lead us on?
Yeah, sure. Well, thanks for covering the macro side. Lots of exciting things over the weekend, obviously. But on the equity side, on my coverage, which is EV and automotive, we got early morning we got the Lucid Q2 delivery numbers, which is kind of like in line with the market and higher than the sell side average. So I did post a little table there in my desk note. So basically, their production was higher and by like 8% compared to sell side, and delivery up 27% above sell side. On my view, so what happened was my production number was higher than expected, and my delivery number is a little bit lower. So what that tells me is that we're actually observing this trend across the industry in Q2, where your delivery number is actually higher than the production. So there are a couple of reasons why production number is being pushed down. So number one, with a case like Tesla or Rivian, it's actually they are ramping up their new product. So Tesla with their new Model 3 and Cybertruck, and Rivian, they are recovering from the factory shutdowns in Q2. So these are good reasons why production is lower. But on the other side is management is being very careful not to increase their inventory further. And this is like not necessarily good news. It's kind of bad news because management doesn't see that much demand coming from the consumers. So I mean it's kind of like a mixed information from this delivery number and production number for the EV sector. But overall, I think despite we have the production ramp up problem, the inventory will start to come down. And as the inventory starts to come down, you probably wouldn't see that much, promotional, like $20,000 off the sticker price like the Loose is doing, right? You'll see less of promotion, and then we will see what the real demand is like. And delivery, obviously, it's up by almost 400 vehicles today for Lucid. So that's actually pretty positive for me because I believe they do have too much inventory on their end. And it's good to see the promotions actually working. So that's a really good positive news. They'll be in really big trouble if after all of the promotions and lower interest rate on the leasing deals, and then they still couldn't get the delivery up. So that'll be that's one of the good news. And it does raise some question though. Like it's not very all good news. It does raise some question. For example, right now, Lucid, they are 662 vehicles behind their 9K fiscal year guidance. So that means they need to average production around 2.6 or like 2,600 vehicles in Q3 and Q4 to meet their guidance. Now, they never reached that level in history. So, and it's also 200 vehicles above the delivery numbers they had in Q2 with all of these, big promotions. So I wouldn't be surprised to see they lower guidance, lower by let's say 500 vehicles, in Q2 or Q3. I think if they're going to lower, it's likely going to be Q3. So that's one of the big downside risk. I wouldn't like. I think for me at least, if they maintain guidance in Q2, I wouldn't treat that as a bad news. I'll probably treat that as a good news because they are lagging behind on their guidance. So that's number one. Number two is given we have so many promotion around these vehicles, what will happen to the ASP is something I'm quite worried about. So yes, you can sell more vehicles, but you see on most of the models, they are almost like if you go to a spec sheet, you're almost saving $20,000 per car. And is that going to have it's like $20,000 hit on their ASP? Maybe, but we'll see what the more details when the actual financial data come out by the end of the earnings. So yeah, I would say today, pretty mixed bag. And one of the positive indication I would rather see is we have production over delivery again. And having production hitting that 2,500 mark, maybe in the next quarter will be a positive sign for me. But so far, being pretty cautious And if we look at the multiples today, right, it's lifting off from the lows of 4.8. Lows of 4.3, like what we discussed last time, and moving back, towards the higher end of between 4 times and 6 times. That's blended forwards 12-month. I think, yeah, it's pretty upbeat, because on the headline, at least it's a headline number beat. But we'll see where the stock drifts from here, especially going into the earnings, because I think this might be the biggest good news they have. And would be curious to see what their comments on ASPs and inventories and the geography side. So yeah, that's I think that's wrapped up about like the US major EV makers, for Q2 on the delivery and production number. So we are moving into the earnings season, and yeah, so that's the update on my end.
Very cool. What do you feel is the dynamic around pricing, right now? Because, in the first half of the year, obviously there was a bit of a price war that took place. Is that still continuing? What's the latest view on that?
On pricing, it really is about like clearing inventory. So I do see that in the first half of the year, ASP will be hitting some of the low points, because now you have these older vehicles, like for Rivian, you have these older platforms that are clearing out the inventory. For Lucid, I think what they're doing is really to help the consumer make the decision, because most of the vehicle doesn't qualify for the EV credit from the government. So it's really they're trying to find ways to push out these vehicles as fast as possible. Now, if we do see a meaningful decline in the inventory, I'm not going to see these ASP or like the promotion to go on forever. They will bounce back once the inventories come lower. And not to add on is on the Rivian side, at least, they are adding more premium vehicles, so that will boost the ASP on their end. For Lucid, I think their ASP wouldn't bounce back very quickly. The reason is their product mix now is slowly skewing towards the lower end of the vehicle, because they have opposite strategy. So Rivian, they released the lowest trim and they kind of build it up. And Lucid, they released the higher trim and then released the lower price ones. So it's like a different kind of marketing strategy. So that's the dynamic I'm seeing. And yeah, so far, like, I think the market got what they are looking for in terms of the numbers, and we just need to see how that flows down to the bottom line.
Got it. So just like, from like near term scrubbing, is Tesla or are any of these guys talking about what they're planning with pricing? Like, what was do we know when like the last update on pricing was?
So I probably need to get back to you on the exact number. But so far from the deliveries, like just from the deliveries and production number and the management comments recently, it really is a product mix issue where consumers are going with the lower price, the lower trim models, rather than the most high end ones, or like the all-in option, maximum price product. So that has been talked about. I think that's a theme from the last fiscal. So at the beginning of the year, when they have the Q4 and fiscal year wrap up for 2023, that has been the trend, and I think we're seeing a continuation of that trend, going into Q2.
Got it. Okay. No, that's super helpful. Thanks for that. All right, who's next?
Hey, I can go. Nothing major to add from me today. Just looking into Elastic, which is a search AI company. Is with Datadog and Dynatrace. So currently going through some reports Andy sent me and hoping to get some read-throughs for Dynatrace.
Nice. Yeah. Um, how do you feel about, because I know that you're working on Dynatrace last week. How do you feel about the company kind of moving into earnings? I know that you were looking at, you had done a great job of laying out the different scenarios. Were you able to kind of tighten that up and look at valuation too?
I started and I kind of went further down rabbit holes, and I just wanted to understand another one of its main competitors before I move on to the valuation, because I kind of understand it versus Datadog, but I wanted to understand what Elastic was doing to see if there was anything there. So, so no, not yet.
Okay, cool. Yeah, I mean, it's always helpful to take a look at the, industry and see how companies are operating. Whenever I start my initiations of companies, I really like initiate at the industry level, just to kind of give myself that, context. So let me know how it goes, and if you need any help working through any of those things.
Yeah, great, thanks. I'll be around like all day tomorrow if you're
All right,
up for
cool.
doing that.
Hunter, how are things on your end?
They're good. So on the cyber front, it's been a little bit slow over the past week, which probably isn't much of a surprise with 4th of July and all that. But as I mentioned in the chat earlier, I started initiating on Fortinet. And so I'm going through the first portion of the initiation. I should be able to get through most of it by the end of today. And kind of just what I'm seeing right now, just from a very basic high level view, is some good comps that are in our coverage universe would be Zscaler and Palo Alto Networks, because Fortinet within their product revenue segment, they do have SASE applications as well as network firewalls. And so I'm thinking from the SASE front that a good read through for that would be Zscaler. And then for the network firewalls, I think Palo Alto Networks would be good for that. And then that makes up about a third of their total revenue. And so then the other third then comes from their service subscriptions as well as technical support services. And so within the FortiGuard application services, as well as I think it's the NOC and SOC security service and web security services, that makes up the subscription part of the service segment. And then you have the additional 33% approximately, which is then coming from technical support services. And so that's just kind of the brief revenue makeup that I got from skimming through the 10K. But then also what I found to be a little bit interesting, at least in comparison to some of our other companies, is that there's about a 40-40 split of revenue coming from the Americas as well as EMEA, and then the additional 20% of revenue then comes from Asia, or APAC, I should say. And so those are just kind of the basic points that I got from starting off this initiation note.
Nice. No, that sounds like you have a great start. The EMEA, we just say EMEA. That's typically what we'll just call it. That's Europe, the Middle East, and North Africa. how do you, because I know that I believe that we have, there should be a couple of initiation notes or at least one note on Fortinet. Were you able to like go through that first?
I wanted to kind of do it myself before I looked at it, but I do see them right here. It looks like Robbie has one, and then Gene as well. And then I think Barnaby, it looks like you might have started on one too. But yeah, I was thinking I'll just do a segment myself and then compare. But if you think that I should take a look at the other ones first, this way I can kind of make sure that I'm on the right track, then I can go ahead and do that as well. I think I'm early enough to where I should be able to do that.
Yeah, I mean, my suggestion is I always like to read like the basics, myself. So that way I'm like, I know, what's going on, and I know what to pay attention to. So, I hear you, and I think that that's a good way to approach it. Probably the only thing that I would say that you might want to look at or do as well is um, as you go through like initiation, like, a lot of it is, there's the easy part of initiation, which is, read the 10K, right? Go through a couple of those items. But then when you're ready to get that like additional context, then it'll be useful to look at, where the, different takes in the initiation notes are. That'll be a little helpful. Yeah. So, as you go, as you like get through the main part of initiation, which is reading through like the 10K, it's really after that point that you might want to take a look just to see if there's anything that you could kind of grab from and see if someone like read something that was interesting. It's going to be helpful because you can see how like maybe something might have changed over time. That's often, pretty useful for me at least. So.
Yeah, that's a good point. So I'll definitely make sure to do that once I'm done going through the 10K and then maybe like the transcripts, because I think going off of that point you just said, once I'm done reading the most recent transcript, looking back at everyone else's analysis of the previous transcripts, I think that'll be super helpful for at least that storyline piece that you mentioned.
Yeah. Cool. Once you get through that part and you're ready for like that the next layer, let me know and I'll get you some expert call transcripts as well from the other databases. But other than that, sounds like you're on the right track. So good work on the initiation and kind of plowing through on Fortinet. Definitely kind of as you go through it, again, think about like the comps and how it's always better to think about comps from a segment level, right? So it's like, if Fortinet competes in SASE, then there's going to be a couple of companies that compete in that space too. And just remember the dynamic that you're going to want to pay attention to, which is, you really want to get a good sense as to what the product market fit is like. And that's always going to be like on a relative basis, how good is their product? Do they deserve to win? Like, who will they win if they go head to head against? Who will they lose to? So that's number one. And then industry dynamics, that's going to be, once you understand how your product or what your product market fit looks like, then you can look to see, what's happening within the industry. Like, is there pricing pressure? Is there some exogenous factor? Like, for example, Microsoft just announced a SASE product over the weekend. So, how might that impact Fortinet? Is that a worrisome thing, or is that going to be fine? And then finally, you want to think about the strategic operating plan and management. And normally that's like the strategic operating plan, that is like part of my like first round of initiation, because it's often going to be like in an investor day, presentation, which is really helpful to understand like the business and what's going on with this, the story of the company. So just make sure that you look for that investor day sort of presentation, and you incorporate that into your like first initiation notes, but then also carve it out to like detail a little bit more in the strategic operating plan and management, because sometimes it'll give you the specific numbers like a certain target by, like X target by Y year or things like that.
Right. I'll make sure to go through that. I'll also read through any information on the Microsoft SASE product to see if there's any information that I can extract from that, which might be useful.
Cool. Great work, guys. Any other questions or kind of general comments?
Yeah, just a quick comment on my end. So, I was, also, you remember last time when Mo, you helped me, clearing out some of the, earnings notes from Rivian. So,
Right.
yeah, so I was, figuring out, how to organize it, and then also picking up clues because I see some interesting stuff, between the release of the numbers and the release of the earnings. So I think I found some kind of like trading opportunities. So what I mean by that is when the companies release the delivery and production number, they don't update the guidance. And sometimes the market or like the multiples get disappointed, when they don't update the guidance. So eventually they do in the earnings call. So I think, I've seen this, I think 1 or 2 times already in my, earnings notes or like earnings scrub. So yeah, maybe that will be something interesting, especially post earning, and something to pay attention to over the next 2 weeks before the earning release to see whether the market get overexcited or underexcited about the guidance revision.
Thanks. Yeah, no, that's definitely a useful barometer to see what the reaction has been. Is that something that you're noticing right now, like when you're looking at what happened with Lucid?
I mean, I'm seeing that more. They haven't moved to a outrageous area yet, but it is moving towards that direction. So like I said, there is a material risk to the downside if they lower their guidance given the pretty low first half of the year production number, and they got a lot to catch up in the later half. So I mean, if the multiple, especially right now, if it goes up further before the earning, and if that imply a very crazy production or delivery number for the whole year, then probably will be some trade idea going around, because that I remember with Rivian, it happened in 2023 Q3. It was like, I think we look at that, it's like, oh wait, they having good numbers. Why did they drop after the like why did multiple shrinks after the production delivery number? And what's interesting, I remember our comment, I remember our question. I go back and read the news. Like I click, like Bloomberg has a function like it's you click on that date and it show you the news before that date.
Right.
It was actually people were disappointed they didn't update their guidance.
Right.
They got a really good quarter, but they didn't upgrade the number, and people got really, really depressed, and then started to sell off the stock. But on the earnings call, they eventually did. So we had a big reversal afterwards. So that was something I picked up, and I think due to the nature that they release the number first and update the guidance, or like on the earnings, like that's the nature of the structure for all of these earning releases. So there is a 20 to 30 day, or like let's call it like 2 weeks to 3 weeks of trading periods where you have partial the data and then you don't have the other half, and some interesting stuff might happen. So I'll keep an eye on that. And I think the other question is, when we look at whether the move is IDEO or the company, I just want to double check with you, because I think you said because Tesla is such a big component of the index, we can just use the index. We should just use Tesla as a proxy for the index to see whether the move is ideal or not, right?
Yeah, you could. So it was that like there's no need to even use the index because if you do it, like 90% of it is Tesla. So you might as well just do a comp versus Tesla. But that's where, like, if you want to comp versus your major competitors, so Tesla, and if you're looking at Rivian, comp it to Lucid as well. Just kind of see how those things are. Like if you've got a EQRV, on Bloomberg, and just you got those as comps, right? So you can see how they're like how it's trading. Yeah, I just meant that you don't need to use like an index for the comps, because a lot of people will do like an average of their peers, but because of how big of a market cap weight Tesla is versus others, there's I would say that's and there's like so few of the companies that just comp it directly.
Okay, gotcha. All right, thank you very much.
Cool. Yeah, no, that'll be pretty exciting. Over the next 2 weeks, I'll be going through and doing my previews for companies in the quarter. Today, like this week, or the next 1 or 2 days, what I'm really doing is like wrapping up my investor letter and just like organizing my thoughts around macro. When I go through like the macro process, it's just like what we do with equities, in the sense that, the first thing that I want to really understand is, what's the story of the economy, and from that, or to do that, I just read and across sell side. So I've went and I've read through. I asked Stefan to help me while I compile a bunch of macro research. I've gone through around 8 of the different firms to understand, actually more than that, to understand what's driving their perspectives. And one of my key takeaways is that, generally speaking, there's sell side is pretty sanguine. They're pretty optimistic on the economy. In fact, almost all of the forecasts that I read through were pointing towards 2.2% plus growth in 2024, and around 2% plus growth in 2025. So very optimistic take by most of sell side. One of the other really interesting things about what's going on sell side is that there definitely is a there's really there's a I don't want to say a blind spot, but there's not a lot of discussion around the overstated payrolls data. And so I think about a month and a half ago or 2 months ago, I was talking to you guys about the Anna Wong piece in Bloomberg, where she had gone through and had compared the home-based payroll data, which tracks pretty well with the household survey, and non-farm payrolls, and found that the birth death adjustment factor explained why you had a divergence between the household survey and the establishment survey. And that divergence is really driven by something called the birth death adjustment that the BLS uses to kind of adjust their sample for a broader characteristic of, say, the number of businesses that have formed or that have closed through a period. Now, BLS updates this, they actually come out with their with an update every quarter for the prior period, the prior year. And so the next update for us comes out in August. So I've actually gone and I looked at the underlying data that Anna Wong had cited, and was able to replicate a portion of it. I don't have home-based data, so I couldn't replicate to the unemployment rate, but I could see how the adjustment in the birth death model impacts non-farm payrolls. The really key thing about this is that in the last week, when Powell was talking, he mentioned that the jobs data may be overstated. So that, to me, was like a big signal that even the Fed knows that there's going to be this revision that's going to happen in August, and that it's going to show that non-farm payrolls have been overstated. So that's one really big dynamic that's like happening, and that there wasn't a lot of discussion about in across the sell side. In fact, there was only one firm, HSBC, that really mentioned it and spoke about it. No one else really was discussing it. Instead, firms like BofA or even Morgan Stanley, where Alan Zatner has done a really good job of kind of like understanding the immigration flow to the economy, they kind of are doubling down on this like strong jobs market narrative, where they see that the surge in immigration will actually raise the base rate for non-farm payrolls. And I just saw that Nick Timmeros, the journalist at Wall Street Journal, he put out this thing earlier today where he actually showed that like the new average or the new base rate or break-even rate is like over 230,000 jobs or something. And so this is exactly a setup, right? Where, you have everyone taking this adjusted number and they're basing their macro view off of it. But we know, and we also had the Federal Reserve, like Jay Powell actually hinted that he knows that this number is overstated. Like those were literally that was the words that he chose to use. So there's this understanding that actually it is overstated. And so that I think is going to result in, obviously, there's going to be some, like one side is going to be right. And one of the key things that we've seen is that non-farm payrolls, even for example, in July, it came in pretty strong at 206, but the past 2 months were revised much lower. And so this is kind of like the trend where like because of the adjustment factor, the headline number comes in strong, but then the prior month gets revised lower. In August, we're going to get an even bigger revision that'll happen. And so I think this puts the Fed in a really bad place. And it's kind of interesting to see that people are like actually raising the bar, which is not what you want at all. Like people are saying that, oh, now the job market can support 230,000 jobs. But if that's the case, then I think it's going to get a little more worrisome. The other big thing too is I'm seeing a lot of research talking about the surge in immigration. That surge has faded dramatically since the beginning of the year. You could take a look at border crossing data. That has gone down a lot. There was a little bit of a surge at the end of 2023. And because of the way that the government's fiscal year works, at the very beginning of 2024, which is like October, November, December, it showed that there was a big rise. But in reality, the current year-to-date data, calendar year, has been much lower. And more importantly, like it's not that this is just some kind of like a seasonal flow. What's really important is that the president, Joe Biden, has actually come out against, the surge in the border. And so they're now trying to, kind of clamp down on that. So what that means is that now there's like a structural impediment. So like maybe previously you might have had like an ebb and a flow naturally because of a cooling labor market, but now it's going to be even worse than that because of the structural, impediment. So kind of going into the next 2 months, there's this really pretty ominous risk of the jobs market. This continues to be like a central tenet of sell side expectations for the rest of the year. And that to me is just way too elevated. Now, what's really surprising is it's not just that the sell side has elevated views, but it's that actually, if you look at the SOFR curves, into the next couple of years, they also remain quite elevated. And so this is kind of one of those interesting setups where I think like the whole market right now is just, and I think that part of it might just be because of some structural flow that happened, from like year to date and seasonal rebalances that happened at the end of the last quarter. but it's like everything is kind of like pricing in a higher for longer and a strong economy, pretty much at like the max level. And so at this point, I'm actually starting to get quite cautious. I wouldn't be surprised to see a little bit of a pullback risk over the next, say, 4 weeks. So that's something that I'm going to probably talk more about as we get through the period. But I'm going to have like a more detailed write up that I'll have in my letter, and I'll send that to you guys too, so you guys can read it as well.
Nice. Yeah, I mean, I'm not sure if like this is kind of like a pressure on those like big sell side, because like for some like more independent research firm, like they're already calling out like the labor market weakness. I think I've seen this on like the BCA and also like the like Ian Shepperson. Like they're
Yeah, Pantheon. Yeah.
yeah, they're advocating like a like the labor market weakness coming sooner than expected. So yeah, not sure if it's just like a like no one like in the big sell side is gonna be like, oh, I'm gonna say something like that's like really like outliers. Like everyone is kind of like being like conservative like in their estimates. But yeah.
I mean that I think that definitely happens. I think that I think we're kind of at a point where it could go either way. And so it's at this time when things could go either way that like you that's when you want more divergence in opinion by the sell side, but that tends to be when they are the most conservative. And I think that just has to do with like a behavioral bias or like an anchoring bias that on the sell side they're just a little bit more cautious, like they might see something that looks a little risky and they'll write about it, but they're not gonna like outright say it just because they can't for them it's much harder to I mean they wouldn't be able to just like focus on just one thing, right? So it's like there's more to the economy than just the jobs market, right? And so I think that they are very cautious of being too early or like too quick. But it also depends on like the economists, right? I mean, you saw Stock Gen, right? And you saw, other guys, and Citi famously had, an outside view. So you're going to sometimes have these outlier views, but yeah, they're not very common. Or they tend to be common like after the fact. Like it's gonna be like after there's some major crash that like you're gonna get these outlier views. You're gonna get someone who says, oh, market's actually going to do really good by the dip, and you're going to have some people that are going to say like, oh my god, we're headed to like the worst recession ever. But it's like sadly when you need them to like put out their stakes, sometimes they just don't do it. And this is where like independent research from smaller shops is sometimes a little bit better because they can get away with focusing on like one or two data points. BCA and Shepherdson, they're all looking at home-based data, and they all know about the whole birth death model thing. But that's just one, that's just like one point, right? And the thing about that is, even when you include that data, so this is something about like BCA, for example, where like even if you include that data and you say, okay, well, jobs will be revised lower, you're not seeing a breakdown in the jobs market. And so because you're not seeing a breakdown in the jobs market, you're just seeing lower jobs. It just means that the bearish curve has worked, that like Fed policy actually has worked. And therefore it's working, and the Fed can start cutting rates because their strategy has been working. It doesn't show, it won't show like a material like acceleration in the decline of jobs. Although that might be something that we're headed towards by the end of summer. Actually, earlier today, Anna Wong on the Bloomberg macro call, she said that auto manufacturers, and actually, Andy, this is going to be something I'm going to ask you to take a look at. She said that auto manufacturers, because they've been selling fewer cars, are most likely to cut back on production by the end of summer. And in that environment, that would lead to a greater number of layoffs. Now, I think when she's thinking about this, when she says autos, she's talking about like Ford, GM, Stellantis, like the larger, OEMs. But it would be kind of good to kind of see like what's the story that's happening there. Is there pressure on them to kind of cut back? And what is the outlook for for like the automobile market look like? We're already like Manheim Auto Index is already down substantial amount, right? You've already seen kind of car prices move lower. They're still quite elevated relative to where they were, 3 or 4 years ago. So is that something that is preventing manufacturers from increasing production, or like what's happening there? Is that a risk for the end of summer? If sorry, if that is a risk, then yeah, you could start to see unemployment rate tick up to 4.2, 4.3%, and surpassing Sam's rule and really getting into things. Actually, one really interesting point that I think that this is like showing how messed up things are. Almost everyone had a forecast that U.S. unemployment rate would hit like 4.1% by the end of Q4 of this year, and we already hit it. Okay, so we just hit it in the last jobs report last week. So everyone's mid-year outlook, right? The jobs criteria, that slack has already been hit. So, it's the data also doesn't show a big lift, right? ISMs came in softer. All of the survey data seems to be coming in softer, and so in this environment, it's not like we're seeing that there's some relief exogenously. On the flip side, okay, or so just to like compound on it or to exacerbate this, maybe Europe is being revised down too. So like earlier in the year, there was this bifurcation that was happening where Europe looked like it was a lot more stronger and was seeing an acceleration. And so there was this, big kind of reweighting that took place. But now it looks like expectations around European growth are also fading. I think actually, interestingly enough, JP Morgan I think they did a pretty good job where they said that their baseline up for growth for the next 2 quarters is going to average about 1%, which is roughly like in line with my thinking. So it's interesting because on one hand they don't really talk about this like labor story, but they do acknowledge that the data has come in soft. And I'm sure you guys remember earlier in the year they were really like talking about that there's going to be a big rebound in ISMs, and instead there wasn't, right? And so I think that component is going to drive a lot of repositioning. JP Morgan, I think, was among the earlier firms to do this, and then we will probably start to see other firms through the second half or through this quarter actually begin to revise down their expectations. So, this kind of sets us up for further, weakness, I think, in the economy, given a time where people are pretty much like max long. So it's just like a bad setup, but just something to kind of pay attention to or think about.
Yeah, I agree. What the consumer appetites depending on, the income. Right, for example, right? So if we don't get that, then how can you allow a consumer to spend on big ticket items, especially like autos? And then if that, I would call it like consumer demand drop away, then yeah, obviously you got to pull back on the production number as we've seen the Q2 numbers already. So like the question is how long that trend will continue. I think that I need to do more research on to see, when they will, re-ramp up on their production side.
Yeah, I mean, one of the things that I would say is if you could take a look to see if they gave any, what was their guidance around production for like the rest of the year or the quarter? Like,
I think
are
flat.
they lifting or are they decreasing or what's going on there?
This year is always flat.
Okay.
Yeah. So I
Even
mean,
for like Ford and GM and those guys?
oh no, I need to check on that. But for the EV
Okay.
guys, it's flat.
Right.
I'll get back to you on the legacy OEMs.
Okay.
Yeah.
All right. Perfect. Cool. No, it's definitely going to be an interesting and exciting time.
Yeah, I mean, over the weekend, you already see some of the on the Bloomberg headlines is they say like hedge fund are piling into Tesla shorts and so on. I was like, okay, I mean, now Bloomberg, you're quite late.
Right.
Yeah. So that's like I combine that with what I said earlier on about delivery and earnings time difference, probably looking at where valuations or multiples get out of line. Like currently is still in the range for these companies, but who knows?
Yeah. I'm actually a little bit more optimistic on EVs because I think that there are you could say that there already it was like a lot of bad news priced in. So estimates are already low. Stocks had already been re-rated much lower. So there was room for the stocks to move. You could say there was room for re-rating to like go back up a little, to go back to like the prior lower range.
Risk is with the Ford and GMs.
Right. Yeah.
Like
the legacy.
those were revised up because of the hybrid sales.
Right.
In the beginning of the year. And I think especially GM was one of the darlings of the auto sector. I mean, the valuation already kind of brought in a little bit more, and we I mean, I need to do more research on that, but just from the backdrop, it is like are we seeing a reversal of the trend in the beginning of the year? That's something we need to pay attention to.
Right. Good points. All right, cool. Well, it's we're at the hour mark. I think we can go ahead and just wrap it up here for today. I should be on, for the rest of the evening. So if you guys have any questions, feel free to pick me online. But other than that, it was a good chat. We'll talk to you guys tomorrow.
Yep. Talk to you tomorrow. See ya.
Yep. Take care, everyone.
All right. See you guys.
See you.
Bye, guys.
Thanks. Bye.
Bye.